Hey guys, welcome back to another video. I've got a big one in store for you today, including an awesome trading opportunity that has really up to 500 pips of potential profit available. But before we get into the charts, as always, I want to hit you with a trading lesson, some of the stuff that I really think is going to help you in your trading journey more so than just me showing you the opportunities that are on my radar. And today's topic is a little bit about the RES, your reticular activating system, and it stems off of something that I shared on social media. I shared a post on Twitter earlier this week from it was something that another trader wrote kind of in the email thanking us for everything we do, and he says, Akil, I've completed and reviewed the first foundation course. I am nearing the end of my first time through the second foundation course, and I'm truly loving the training. I am now seeing other setups in the training videos before you even mention them in a live room. This is positive confirmation for me that I am on the right track. And I wrote a caption to this. I said, I feel like trading is very similar to quicksand. The harder you search for something, the harder it is to find. Like in quicksand, they always say the more you struggle to get out, the deeper you go. In trading, the more you kind of search for the answer, the harder it is to kind of get that answer. However, when you focus on just learning and following a process, you no longer have to search for things, and what you're looking for tends to pop out to you. And there was a response to that from a trader that said, hey, a neuroscientist could explain how this happens. I think it's something to do with deliberately shifting your focus, maybe the same reason meditation can help your trading. And I don't claim to be a neuroscientist, although I have 2 degrees from university. But I do a lot of work in the mindset space. So I work with people in general, not just traders, but I work with people on self-improvement, self-development, making mindset and mindset changes and shifts and kind of, we talk about neural pathways in your brain, a lot of the psychological stuff that really goes into trading, but in general life as well. And something that's big in trading that we always talk about is called the RES, your reticular activating system. And essentially it has many focuses and does many things. But in trading, one of the main thing it does is it allows you to kind of filter out what's important from what's not important. Our brain does it on an everyday basis. The trader that I was talking to actually gave this example, which I never even thought of. He said that your nose, right, is always in your line of sight, right? If I close my eyes, you can kind of see it. But our eyes are so used to ignoring it that we don't even notice that it's there, right? Same thing with you guys that wear glasses. When I first started wearing glasses, I was annoyed because I can see the frame and all this fun stuff. And many years later, I don't even notice that I have them on. And it's our ability to kind of understand what's important, what's not important, and kind of have that lock-in focus. One more analogy for you sports fans out there. When I played football, I remember we'd also talk about kind of everything slows down. When the ball's in the air, everything slows down. You don't think about hearing. Nothing else matters aside from that football. And that's that kind of pure focus on the moment. Trading is the same way. And this is why we always advise that, you don't want to look for the answer. You just want to learn how to trade. Spend time in the charts when you're looking for something to backtest, when you're looking to kind of understand and develop the skill of finding something specific in the market. There's no better training method than time in the market. I don't care how many books you read, how many videos you watch, how many podcast episodes you listen to. Time in the market is going to be your best teacher because it's the only thing that's going to train your eyes. And once you lock in on that focus and train your eyes, your RES is going to begin picking out what you're training your eyes to see and ignoring everything else. One more example. This is a good one because there's so many of these, right? Have you guys ever bought a new car? Right? You ever buy a new car and you're like, man, I've never seen this model. I've never seen this color. I'm going to be the only one with it. And then as soon as you buy a car, what do you notice? Everyone else got this. When did they, right? Those cars always existed out there, but now you've only noticed it because it has an upward importance. And for you guys that are new, I always advise this, right? Learn one thing at a time. Don't back test, multiple strategies at a time because you're going to split your focus. When you're backtesting, focus on one thing because the backtesting process, yes, it's about developing or acquiring data and seeing if it works and making tweaks and filters and all that fun stuff. But it's also to train your eyes. There's no better tool than going through years and years and years and hundreds and thousands of examples in the past to train your eyes on what to look for. But if you're doing that on a million things at once, it's going to be harder to recognize. It's going to be harder to focus on than if you're doing one thing, right? Take a second right now and I want you to look around your room, right? Look around the room and pick out everything that's blue, right? All right, hope I'm not blurry coming back to you guys, but how many things could you write down? Probably a lot. Now imagine if I gave you that same exercise and I said, write down everything that's blue, orange, green, and red, right? You're not gonna be able to have as big of a list for each individual color, because now instead of locking your focus in on one thing, you're splitting your focus between a million things, and that's harder for your brain to understand. So I thought that was a cool lesson. It randomly came up throughout the week, but that's why I love interacting with you guys on social media. If you're on there, give me a follow. Don't be afraid to ask me questions or anything like that. I love answering them because they inspire rants like this, which I think are good for traders and will help more people than just yourself. So RES is important. Train your eyes, time in the chart, nothing beats that. Speaking of the charts, let's get the disclaimer out the way, and I'll meet you guys over on our first pair. Ooh, also forgot. I have a very big announcement that I'm going to share with you guys. I almost forgot to say this. I'm going to share it at the very end. That way I don't take up any more space in the beginning. But workshop coming up soon. Tell you more about it at the end of the video. Now let's hit the disclaimer. So we're going to start here on the euro dollar. And as always, for you guys that don't have the opportunity to join me on a daily basis, I'll give you a little bit of a recap of what we've talked about and looked at throughout the week. And first and foremost, I guess even going weeks and months back, I thought we would see a bearish push here on the euro. We had this area of consolidation that came off after a nice directional move to the upside. We then violated that level of structure, if I can find the right tool here. We violated that level of structure to the downside, put in a pullback, and I thought we would see a continuation lower. Now, lo and behold, again, this came right in the time of election and whatnot, and the markets kind of got choppy. But essentially what has happened is we've gone right back into consolidation. You can see the market up, failed to extend down and test the lows, came back up, now then extended down and tested the lows, and now came back up. And the most recent move that you'll see here in the price chart is a hold of a previous level of resistance, right? If we take this most recent swing, the high of this most recent swing right here, you can see that price has rallied up. We've come to test that previous level of resistance, and we failed to break and close above it. Now, typically a break and close above would cause me to make a prediction that we're likely to continue higher. Not necessarily in this case, because you can see looking left, we just have, more and more resistance. So there's no real higher way to go. I call it overlapping levels of structure. There's a ceiling on top of the ceiling. But it does tell me something that we're able to hold that level. Now, if we go down, and again, we use the higher time frames just to kind of give perspective, make a prediction on the market. And one takeaway that you can have from here is that I do not have a directional bias. Now, you may be asking yourself, Akil, if you don't have a directional bias, what's the point of looking at it? And sometimes there isn't, but consolidation leaves opportunities as well. There are opportunities for trading the bounces off of support and resistance. There are opportunities to catch the move inside the move, right? There are going to be the market moves in fractals, so there will be smaller trends within bigger trends. And those opportunities are okay to trade as long as we have the right perspective, as long as we're not looking at that smaller trend and looking for a 1,000 pip move. If we're doing that, we're going to be in trouble. That's a bad target placement, which is one of the main issues I see with traders. But if we're looking at it from a perspective of, hey, there's a bullish opportunity here, but it's very minimal, we can still take advantage of it. So in fact, we're going to go down to the hourly chart. I'm going to pause the taper, just stop talking for a little bit. And I want to ask you the question. Do you see anything in front of you? Is there anything of relevance? Or is it just a completely junky chart? What do you guys see here? Now, I would say this, chances are if you haven't trained your eyes and your RES to identify this particular thing, you're probably looking at the chart saying nothing. Maybe you might be saying head and shoulders as well if you're trained towards that. But if you have worked on your identification skills of advanced pattern formations and a Cypher pattern specifically, you're going to see this kind of junky type of move. And instead of just seeing a bunch of junk, which you can do nothing with, you may be seeing this as an X to A, swing high to swing low, an A to B, oops, there we go, an A to B right here, a B to C coming down to this leg, and then a CD completion. Let's see how good my RAS is with just kind of identifying that completion point. Right around here should be our 786 Fibonacci retracement. Let's just see. Look at that, almost right on there, right? So again, what may seem like junk to many may actually be very good trading opportunities for others. Again, this is just a good example of when you're new, you're probably not seeing this simply because your eyes aren't trained. But if you put in the work necessary, different things are going to pop out to you, and you're going to see that the market offers a lot more opportunities than you may think. And that's not just for pattern trading. This was just the example that was here on the euro dollar, but it could be anything. It could be for a head and shoulders, left shoulder, kind of a double head, right shoulder right here. It could be for triangle formations, right? Triangle right here with a flagpole before it's a pennant pattern, right? You can whatever you're training for, it's important that you train your eyes, because you're not going to be able to focus on it. It's not going to pop out to you unless you've done that, because the majority of the time, I mean, most of the stuff that the market gives you is junk. And many new traders, you can probably, kind of back me up on this, but the first time you look at a price chart, you're just overwhelmed. You're either overwhelmed or bored. There's either so much you're seeing because it's all bunch of movement and you're trying to pay attention to every single candlestick, or you see just nothing, just squiggly wigglies on the chart. And again, if you practice your skill, if you take time to really train it, it's just amazing how you view the charts in a different sense once you kind of know what to look for. So Eurodollar is a good example of that. Let's go on to our next pair. Let's go to the pound dollar. This isn't really a trading opportunity, but I want to follow up on this because, again, if you've been following these weekly videos here on YouTube, I've been talking about this for a while now. If you've been following me in a live room, we've been talking about this every day. My prediction on pound dollar, for a long time has been a move to 134. In fact, since we violated this level, it's been a move to 134. Unfortunately, the market has not provided, there you go, I'm about to say providden, has not provided an opportunity to get there. And even with our most recent test, which is something that was on my radar, it didn't give me a trading opportunity, and I want to walk you through that a little bit. So this is a non-trade. I still think 134 is the place we're likely to go next if we continue higher. If you can find a reason for entry, by all means, take it. But we were looking for a retest of this level of support, right? This green box that I have drawn on my screen, looking for a reversal reason at that level and a chance to go along. And this was almost the perfect setup for me. Almost the perfect setup, right? As you can see, price came down. I'll do a little replay mode here for you. Price came down into that previous level of structure support. Boom, boom, boom. Also had that 131 even handle, that psychological level we were looking at, $1.31. You can see we came down, boom. Now we had a high momentum candle down into that level, and then we followed that up with a small candle, right? So a lot less momentum, right? Smaller range than the previous one. And now this is not necessarily a doji candle. It's not a pin bar in the direction that we would want to see it. That would make the opportunity even better. But it is a first clue that we may see a little bit of a slowdown, and the market may either go into consolidation or may even reverse at this point. We've also been able to add to that some RSI over soldness, right? RSI went went beyond the 20. Now, typically with your default RSI, I think the 30 is going to be your oversold point. I use the 20. I look for those extreme levels, and we hit that as well. Our next candle, right? Another consolidation candle. This is more of a doji-like. You can see very small. There's a wick to the downside, a wick to the upside. Price action takes place within the middle. This is going to be a sign of indecision, or that's what this candlestick is going to show us. Again, another clue that, hey, we may be slowing down and we may see a reversal, or we may be slowing down and see a continuation, right? Honestly, at this point, you have no idea. And this is why it's important. I always say this, right? As traders, we want to be predictive in our analysis, reactive in our execution, right? The internet sometimes gives me a hard time when I say, hey, we're using price action to predict the markets. And you're like, well, you can't predict which way the markets are going to go. But you don't know the whole story. We're predictive in saying, if this, then that. If this, then that. Meaning, if this happens, then the probabilities is that it will do this. Or if this happens, then the probability will do that. It's not a prediction in the sense of it will happen, it has to happen, it must happen, all of that dumb stuff, right? It's playing probabilities. But we're reactive in our execution because we're waiting for that sign. So it's not just, hey, I predict the market's going to do this, so sell it right now. It's hey, If I get this specific sign I know tells me this, then I'm looking to enter. And in this case, I was looking for a higher high, higher close candlestick to give me some confirmation that the Bulls have won the session, and that we're likely to see a little bit of a turnaround at this area. And we're looking at this, and I'm measuring off risk reward, and everything looks great, right? Just to give you guys an idea of what risk reward looks like. I am a conservative trader when I'm not a true trend following trader, so I can't shoot for 134s with my initial target. That would be great because that would put me all the way up here and it would be amazing. And I would actually have an opportunity to take the trade. For me, I'm shooting for a retest of the high, so it's a lot lower level. My stops would have been 60s, 130, 60s, right around here. So still pretty decent risk reward. This is almost a 2-to-1. I'll take this all day, every day, twice on boom, Sundays, right? So we're looking for something like this, and we didn't necessarily get it. So we'll continue to scroll through, right? Boom. Nice candle, but the question is, did we get a higher high, higher close? Did we get a break above, close above? No, we did not. So non-entry for me, right? Akil, why can't you enter? Because I follow my rules. I forgot it was, I just had a conversation with someone on Twitter about this where they were talking about, no, it was a YouTube comment where I think it was Bruce talking about traders where it's like they do all this analysis and then they get bored and they just take the trade. And that's how many rookie traders and newer traders kind of get burnt in the market. And that's so true. So couldn't take the trade here. Next candle came. Eventually, we did get our higher high, higher close right there. However, this came at a point where it's going to be a little bit too far for me to take the trade because guess what? If I enter up there, what happens to my risk reward? It is now inverse, right? You can see that the amount I have to risk, right, is more than what I have to gain as a reward. And that's not a situation that I want to put myself in, knowing my track record as a trader, my win percentage and whatnot. I need to have the risk reward in my favor. So it was close, close but no cigar. Now I say this, if you were someone that's shooting more of a trend following trader, meaning you're not taking initial targets off at a retest of the highs, rather an extension, you're still in business. So it's going to open up a lot more opportunity because you have a larger profit projection. But again, my personal profit projection, first target, just because of the type of trader I am, is right here, and eliminate the opportunity. So again, thought I would share this because it's not a trading opportunity, but it's something I know we've been tracking day in and day out in the live room. We've been waiting for this moment, and the moment came and gone without giving us an opportunity to get involved. But that's discipline in trading. That's going to happen. We talked about this a lot. The majority of your time spent on the chart is going to be doing analysis that never actually pans out. But I still think a good example of a trade walkthrough and what it would look like or what we were looking for as far as needing to take the trading opportunity. So we'll keep an eye on it. There will be alternate opportunities, trust me. So we'll keep this on the radar until we get to 134. This is still a good buying opportunity in my opinion. Now, coming off of a good buying opportunity, let's talk about Euro New Zealand, because this is a good selling opportunity. This was one that one of my trading buddies, Richard, he's been a member of our platform for a while now. He's religiously in both live rooms, so hats off to that type of dedication. Reminds me of some other successful traders, so that's a good sign, Rich. He pointed this out to me on Wednesday. And this isn't a pair I usually look at, but I took a look because that's what we do. And I think this is an amazing trading opportunity. I hesitated in saying that because every time I do, I jinx it and got to like pound dollar and it doesn't give you what you need. But I think it's an amazing trading opportunity. And this is another trend following opportunity. Now, I'll walk you through kind of what we're looking at. And I just got this question on the Twitter when I asked, hey, what do you guys want to look at in this week's video? Somebody said, hey, can you talk about how do you draw the best support and resistance lines? And I'm not a fan of trend lines. I don't think there's anything wrong with trend lines. You know, I try not to judge other traders on how they trade. My philosophy is like, yeah, look, if it consistently works for you and it makes money, do it. If it's rules-based, do it, right? And there's plenty of ways you can do anything in this market and make money. I think Market Wizards taught us all that, the various Market Wizards books and the interview of the best traders of our times and how they all did it in a slightly different way. I personally believe in horizontal support and resistance, meaning I'm not trying to connect the dots and draw trend lines and do stuff like this. I'm looking at swing points in the market, right? So swing highs right here, swing lows right here, and these are going to be my levels of structure that I'm concerned about. This is why it's so important for you guys that are on the platform. Take your time and work through the foundation courses, right? The courses where we're teaching you, that was a horrible drawing right there, but the courses where we're teaching you on how to draw these ebbs and flows out, right? Pay attention, because guess what these same moves are going to be, right? These are going to be your key levels of support and resistance, support and resistance, support and resistance. And you're going to need to know these, whether it's for trade entry, whether it's for stop placement, whether it's for target placement. It's going to become very important. So just don't rush to the mastery course and try to learn some strategies, because those strategies are going to be pointless unless you understand the basics. It's like building a house without a solid foundation. It's going to look pretty for a while, but eventually it's going to crumble and you're going to be very upset, and you're going to have to spend a lot of money rebuilding that house, or just be homeless and not have a house. So horizontal support and resistance. So I look at previous swings, and what we did here on the daily is we broke and closed below our previous level of structure support. You can see this red candle a few days ago, lower low, lower close. If we break and close below that level, then we can predict a continuation to the downside. If we can predict a continuation to the downside, where are we likely to go to the downside? Our analysis put us right at this previous swing, a little bit above it, right? So we're looking at that 68 even level right here. And then the next question is, how are we likely to get there? And there's two ways. We can either go straight down there or we can pull back. And a pullback is exactly what we had. And one of the key levels that we were looking at was right in here, right? We call it this little pregnant pause, right? High momentum bearish candle. Pause, indecision, think about it. Another high momentum bearish candle. And you can see the wicks up here, right? These wicks represent the buying pressure trying to make a push up, right? You see that bearish candle, as strong as a close as you can get, and then the bulls try to push up and they get rejected. Even at the start of this next bearish candle right here, the bulls try to push up and they get rejected. Boom. As you go down to a lower time frame, you can see that's going to form a pretty decent level of structure. It's also going to be a point that we want to pay attention to in the future, because look at this. We know that if there was a reaction, a battle, right? Again, foundation course members, we always talk about that battle between the bulls and the bears. That's, how price moves, or buyers and sellers. There was a battle here before. We expect there to be a battle here again, and that battle's going to offer a good opportunity to place a trade. So going down to the lower time frame, the 4 hour, right? Here is one where we did get that lower low, lower close, right? Unlike the pound dollar, you can see that after we came up, put in a few dojis, some indecision right next to a previous level of indecision, you did get a lower low, lower close right there. So if you're someone looking for an entry on this trade, right? Entry at market. And that next candle's pretty good too, with the wick to the upside. Entry at market. Stops need to be above the highs. I'm looking at stops. I don't care about politics. What we're at the time right here. So we're looking. What are we at here? 173.42. 173.90s. We know that if you're going to be at 173.90s, you might as well be where? You might as well be above the 174 even handle. Get slightly above there. So stops looking at that. And then again, conservative targets, looking at a retest of the previous structural lows. Again, 1.641 risk reward. And then here's the kicker, right? The bigger target that we talked about. This is where the money's made, right? The bigger target all the way down. I got to zoom out my charts all the way down around 168, right? That's the bigger projection. That's the bigger projection. And we talked about this in two aspects. One, as a swing trader, here's your opportunity right here. As a day trader, we've been looking at this intraday, looking to see if you can catch day trading opportunities, bearish day trading opportunities, until you get to that level. And you can see with us trading at about 173s basically, and our projection being 168, that's about 500 pips of potential profit, right? So either 500 pips of potential profit on this bigger trade, or a 500 pip range of where you can look for smaller profitable opportunities on the lower time frame. So either way, you guys should be seeing why this is the number one setup on my radar, and we've come back to a very good point where you can capture it at low risk. So Euro New Zealand, good opportunity again. Even if you're a more conservative trader, We know this because we teach different ways to take advantage of a trade. Look for maybe a double top. Can't get a double top, look for something like a 2618. Right? So multiple ways that you can potentially get involved in this trade. Speaking of 2618s, if you guys don't know what a 2618 is, our next pair will take us there. That is going to be the gold. That is going to be the gold. Gold's been pretty wacky. Again, nice pattern formation. Nailed it, right? Fell off a cliff, and now we've come down and basically started consolidating. Now, I wasn't sure what was going to happen here. We got these big moves in the market, not after the election, but after kind of the Pfizer news came out and everyone went bonkers and whatnot. And usually after fundamental news like that, I expect some type of response. People overreact, 90%, and they don't realize all the other stuff that goes involved in it, and they kind of, the market retraces. But we didn't really see that here. We saw, I guess we did see a little bit of a retracement, but we saw not the kind of nasty consolidation that we've seen on other pairs. We actually saw a bounce, and we saw a very beautiful symmetrical double bottom right here, right? RSI goes oversold on the first one. You can see RSI divergence on the second one. At a key level of structure, we never violate it, right? Again, looking at horizontal support and resistance, we never violate this level of structure right here. That's a nice double bottom right there. Now, a prediction on where we would go, if we would go higher, that's where you get into trouble. I have zero type of prediction on where this double bottom would take us to. That's going to be a little bit of the issue here, but nice double bottom setup. And what we've done after that is that we've broken and closed above these highs, right? That's going to give me, that's a positive sign for looking for a bullish movement. And if we were to retrace back down, we would have a 2618 opportunity. Excuse me. And the 2618 is a secondary chance or a more conservative chance to get yourself involved in a double bottom. So if you're someone that was looking at this double bottom but was unsure or want to be a little bit cautious, I guess, look for a retest in the form of a 2618 and then look for a move higher. Last but not least, speaking of moves higher, let's take a look, another look at Bitcoin. This is one we took a look at last week, maybe. I shared it here on TradingView. I know that. I can't remember what we look at in these videos, but we were looking at this ascending triangle and looking for a move higher. You can see that we did break out of our ascending triangle, giving us our initial breakout. We've now come back down to retest. So you're looking for a secondary reason to get involved here. See if you can get involved after the retest, after the pullback. There's still room to go higher here on Bitcoin. So a secondary opportunity at trading this ascending triangle, at trading this this breakout on the pullback. So keep an eye on that. Speaking of that, that's it as far as the charts for today's video. But I did tell you I was going to tell you about something very special coming up, and I do not lie. We are hosting another trading workshop in a few weeks. It's going to be November 24th and 25th. That's the Tuesday and Wednesday prior to Thanksgiving. So not our normal 4-day mega workshop, but short, sweet 2 days, of course, loaded with information, some very special guests that you'll be hearing about soon coming and talking to you guys. And trust me, you don't want to miss it. If you've never been to a workshop before, it's amazing. It's absolutely free. It's not filled with fluff. We're here to teach you stuff and help push you along that trading journey. Now, you should be getting an email. If you're a part of our email list, you should be getting an email as soon as we put that stuff together and mail it out. And if you've ever attended a workshop in the past, or if you've ever taken a trial membership, then we have your email on file. Don't worry about it. If you're not sure if we have your email, if you know that we do not, here's what I want you to do. Go over to our website, www.tier1trading.com. Click this button right here that says, yes, I want your free training. Scroll down a little bit. Give us your email right here, and this will do you two things, right? One, it's going to give you access to our Ascension workshop, which I think every new or struggling trader needs to take a look at. Trust me, you're not going to go forward with your training if you don't, but it's also going to give us your email for the future. So when we do send out that the registration link for the workshop, you'll get that sent directly to you so you can register and make sure and save your spot and all that fun stuff. So you can kind of kill two birds with one stone. You get some free training right now to hold you over until the event, and then you get to register for the event. So www.tier1trading.com/free. Of course, you can also do the same thing by taking the trial membership if you want to do that as well. Sign up for a trial, spend 14 days on the platform, and then spend it in the workshop as well. That's another option. You get all this cool stuff. Obviously, we've promoted it before. But I look forward to seeing you guys there. As always, do me a favor, hit that like button. Leave me a comment if you have any questions about anything I went over or anything in general. A lot of those comments become future episodes of the Trading Coach podcast. And of course, if you're brand new, make sure you subscribe to the channel, hit that red button, make sure that bell is hit. That way you get notified each and every time I put out a new video. Wish you guys a great weekend, and I'll see you guys next week.